What's up, everybody? Today we are going to talk about the scope and the scope extension tool. Okay, in the PDF you have the levels for the scope and the scope extension, which are the scope, the 0.66 and 0.616, and the scope extension, the 0.786 and 0.818. Okay, how do we use those scope levels? There's a multitude of ways. Scope and scope extension support is pulled from the low to the high, swing low to the high, and the scope and scope extension in reverse for resistance is pulled from the high, the swing high, to the subsequent low. So let's take an example right off this chart in front of us. This is Ethereum's price action right now, okay, live as we speak. What do we see? All right, we had the swing low here to the swing high. I actually took this short position. Okay, we have the swing low to the swing high. So we're pulling the scope from the swing low to the swing high after this price action. You can see the scope lines up here and the scope extension. For added confluence, what do we see? Scope extension lining up with the recovery of the last of the remaining green candles on the 1 minute time frame need to be recovered. You see the green candle here, quick wick down, recovery, continuation to the upside. Okay, so I took this short position. All right, just the added confluence. We'll talk about those in other videos, but added confluence. Okay, we go to the higher time frame chart. All right, what do we see? Price taking off to the upside. Green candle extended from the 50 EMA. Again, reverse scope. Swing high, swing low, pull it across. What do you see? The exact scope extension. Pin above, close below, pin above, close below. Added confluence. Green candle coming into the reverse scope and reverse scope extension levels. Okay, confluence for my short. We take shorts from the high of the day, or near the high of the day. We look for longs from the low of the day. Okay, standard Steve Moore market maker stuff. All right, so when we go down to lower time frame, we're looking to enter. We got the green candle. We see we're coming into the reverse scope of the move. Okay, that's here. All right, then what do? We pull out our reverse scope. Here's the high to the first low. Pull it across. What do you see? Right up into the reverse scope. We'll make those red. Okay, so if you missed the original entry, you have a place to not FOMO into the reverse scope extension. If you do catch this entry, stop loss above the previous wick, you wait and see. The scope, reverse scope, held resistance. Therefore, there is no threat or sweat to your short trade. Okay, price comes down to the next low. We pull the next scope. We pull it over. You can see price comes back up into the next level reverse scope. Reverse, it's the swing high to the next subsequent lows, looking for that retrace up to hold resistance, and vice versa for the scope support. We'll get into that in a minute. As we can see, price action is doing just that. All right, we can do all the scope lessons right here on live price action. All right, adding in the confluences. So price then continues to the downside. What I do then is move my stop loss from above the previous wick to above the reverse scope extension, the most recent one that held. Okay, now you can see we come down to the bottom, okay, where we recovered the green candle at the scope extension. You pull it across, what do you see? Reverse scope extension now lined up with a recovery of the previous red. That is confluence. Does it mean price is going to come here, find resistance, continue down? It doesn't mean that. It increases probability due to confluence. When we're coming up into selling imbalances to recover red, we're also coming into a resistance level. Same thing down here. When we're coming into the buying imbalances, we're coming into a support level. Okay, and you often see price reverse in the opposite direction. Okay, not always, but often. All right, so this is that. Then we come down to the bottom. All right, whole new trading. Recover the green into support, whole separate trade. We are then pulling out our scopes once again. Swing low to swing high. Turn it green. It's support. What do we see? Price comes right down into the scope. Okay? Then we pull the next one. Price has not even come down into that scope level yet. That means the uptrend is even stronger. If we're already in a position, the scope and the scope extension are like our lines of defense. All right, but if price doesn't even make it down to that level, that signifies to us that the uptrend is even stronger. Okay, the higher the low, or the lower the high on in a short. Okay, the higher the low in a long, the higher the trend, the higher the strength of the trend. Okay, so now we will be looking for price to come up into the reverse scope. We have the confluences of the previous red candle. Scope levels are holding. The first one holds here. All right, so if you were entering a hedge position here, you are short. All right, you've already hit your take profit level down here at the recovery of the previous candle. What else did you have? Okay, 50 EMA was here. Okay, you could have waited for the initial balance high. You could have taken profits at the point of control. We go to our higher time frame chart for added confluence. What else do we see? It was the daily VWAP, okay, and daily support and resistance level. They pinned below, looking to close back above these levels now. Okay, so it's about adding in these confluences, guys, along with the scope. But the scope itself is confluence. Okay, so if you took this position here, how would you monitor the position? Again, no green candles near your entry, increasing probability of price not coming back near your entry because there's no candles there to recover. Okay, what do I mean by that? Look, it's all on the 1 minute time frame. It's a lot of PVA candles, so you can really use that to your advantage. Just like on the higher time frames, you see a little bit less of PVA candles, all right, but you get an idea of direction. On the lower time frames, we really get an idea of direction because of the frequency of volume related candles. Okay, I'll call them TVA, tactical volume analysis, right? So we anticipate that price comes here, comes up into the first scope. We then pull it from the swing low. We continue to the next subsequent high and pull it over. All right. If you had entered here, you can now look to move your stop loss up here. All right. If you missed this entry, you could have looked for entry here. Support level, previous green has been recovered, and there is red left above to recover above. Okay, so that's your scopes. Okay, let's look at it on higher time frame charts. All right, let's go to we'll look at ADA. Okay, separate coin. All right, how do you pull them on higher time frame charts? Exactly this. Okay, exactly the same way. Price comes down, you get a swing low. Okay, you pull it from the swing low to the high, all the way across. This was the last high before the retrace. You can see it holds support and continues to the upside. We look at the even higher time frame here. Okay, once again, swing low. So this would have been a scope, the first scope, okay, showing support, and then it would have been pulled to subsequent next highs. Okay, so here price doesn't even come back down to the scope. Here price still doesn't even come back to that scope. All right, and that remains the high. Price slowly makes its way back down into the scope of the move, then up into the next local scope, and a continuation to the upside. Perfect price action. Okay, so if you longed here, okay, you could look to add to the position here as you would already have hit in multiple take profits. All right, same thing with the reverse scope. Okay, we'll take a look at it here. Reverse scope and reverse scope extensions. All right, what do we have here, right? Swing high, swing low, pull it across. You can see the scope broke. However, when you turn on your extension tool, what do you see? Boom, right into the reverse scope extension. And then again, add in the confluences, weekly support and resistance, downward trend line, okay? So price breaks down below the weekly support and resistance, and you see it lines up with the reverse scope extension. There's your confluence, recovering previous liquidity on the lower time frames. These were red candles in here, recovering previous liquidity to the upside into the reverse scope extension and drop, okay? We'll do a couple more examples on the lower time frames. Let's just pick a random coin that we are not even trading or talking about. So same thing here, right? What do we see? Just practice pulling it, guys. Swing low, swing high, pull it across. What do you see? To the dollar into the scope extension. Okay, scope, retrace down into the extension. So you would look for this level to hold in order to continue to the upside. Then you want to look at your opposing resistance levels. What do you see? No surprise there. Okay, draw it out for you. Resistance levels line up exactly with what? Previous red candle at the scope, previous red candle at the scope extension. Okay, and you add in the confluences. So again, coming down into this green candle recovery, you get the stopping volume coming in here, price retraces back down. I mean, guys, the scope is everywhere. Look, pull it here too. Okay, pulling it, it gets pulled from the wicks. Wick to wick, pull it over. What do you see? Pin to the scope extension, up into the scope. Then you would look for a continuation to the upside, 50 EMA, which is the 800 on the 1 minute time frame, reverse scope extension. These would be where you would look to take profit at the subsequent resistance levels and previous liquidity recovery. Let's go back. This is how you guys are going to get it. You're just going to go in the chart and practice pulling it from the swing low to the swing high. You pull it across, okay? What do you see? Price comes back and finds support. Okay, let's do some resistance. All right, we can find resistance from what? The swing highs of the move down to the swing lows of the move. Up into the reverse scope extension, drop. Okay, keep pull the subsequent resistance level, price comes back, doesn't even hit the scope, retest of the 50, continuation to the downside. Okay, they are my validation levels. All right. Just go through your charts. You're looking for your scopes or when price is extended below the 50, and your scope extensions when reverse scopes when price is extended above the 50. So all you're going to do is go back in the charts and practice. Swing high, swing low. What do you know? Okay. Next high up here. You pull it across. What do you see? Perfect scope support. Okay, that's the extension down here. This is the scope. All right, I just do them with both on the charts, and then if it holds at the scope, I'll go change my tool so there's not as much clutter on the charts. Nonetheless, you can see the scope holds here. All right, when they break, that's when I look to see that most likely the trade is invalidated. Okay, just find your highs, find your lows. Start getting used to seeing them. Okay, reverse scope. Okay, hopefully this is clicking for you guys, seeing it right here on the screen. Okay, and then how do we use it? Like I described with Ethereum. Okay, we just went through it on the trade. Where's ETH? Let's take a look at the price action again right now. Okay, move it over to price action as we see it. All right, it's on this thing here. Okay, so this is what we're looking for. Again, I took the trade this morning. We saw price come back up into the reverse scope. I talked to Danny about it. Okay, we took this trade together. All right, a lot of people took this trade. Okay, extend into the upside. All the confluences were there. Into the reverse scope, down, and we have the reverse scope here lining up with previous liquidity. Okay, so these are now take profits for longs. We anticipate price has a higher probability of coming up into this area. However, it's coming up into a resistance level, and then that's where we may look to add to the position. Okay, guys, so that's the scope and the scope extension. Let's do a couple more examples on the higher time frame charts just to give you guys an idea. Again, this is an extended push to the upside right now, but when you go back into price action, that's not as dramatic, so to speak. Okay, you can see we come down, form our bottom, swing low, swing high, pull it across. Okay, scope extension, turn them on. What do you see? Support, right? Continue to pull it across because here we have the same high. Okay, so it continues to pull across. This remains the scope the whole time because we didn't put in a new high. Okay, and we continue to move price to the side. All right, and what do we see? Support, support, support. Okay, so have you entered at the bottom? Okay, you find that support. You can move your stop loss and a profit if you must. Okay, remember you would already have taken a profit here most likely. Why? Because you're up 20% by that point. Okay, this is the 1 hour. Okay, so these are areas that either I would look to add to my position or I would look to enter if I missed the bottom. You could have entered at any one of these levels with a stop loss below the previous wick. You would have had zero drawdown on any of these trades. Okay, just off the scope extension. Okay, 7% without leverage. First, what was that? 30% without leverage. This is a higher term time frame, guys. 18% without leverage. Okay, I use 16x, do the math. All right, 7%. Okay, what do we have here? 9%. Okay, what do we have here? 12%. Then we continue to drag it over before we took off to the upside where we are now. And then what do? What do you see here, guys, right? From the scope up into the scope extension, up into the scope, and then the continuation to the upside where we are now, another 20%. Okay, bring price back near the highs. All right, this was a V-shaped high for this particular coin. All right, same thing here. This is the hourly. All right, what do we see here? Swing high, swing low, drag it across. What do you see? Right up into the reverse scope drop. Okay, you would then bring your scope down to this level, the high to the low. You would drag it across price action. What do you see? Up into the reverse scope, recovery of most of that previous red candle, and drop. Okay, same thing here. From the high to the low, drag it across. What do you see? Okay, pinned up, holding below the scope, drop. Okay, you would move it down to your next level, drag it over, Price comes back up into your reverse scope, drop, okay, and you keep dragging it down, all right? So as you're short here, you're now looking for long positions, and these become your take profits on the long. You would have been stopped out on your short in this on this candle here, where you are then looking for your next short, where you takes the high with notable volume, comes back up into the reverse scope. If you missed the top, you would have caught this reverse scope right here. Okay, right here. Okay, you would have caught this reverse scope extension, and you would have been short. Okay, your stop loss from this long would have been in profit, would have got stopped out. Okay, but price continued to the downside nonetheless, and you'd be looking for opposing long positions. Okay, guys? So that's the scope and the scope extension. Again, what you guys need to do is go on your chart, go on all the different time frames on your chart, and just practice pulling it, okay, from lows to highs. Here's an example of a swing failure pattern real quick before we go, right? What do we see? Okay, swing low to swing high. Price comes back down to the scope extension. Pin below, close back above. Pin below, close above. They trapped shorts here. This was a full red candle that closed back above. So if you did not, you had the previous green down here that we would anticipate to be recovered. Okay, so even if you missed catching this bottom, which we'll talk about in later videos, this is the pin through, close above, the swing failure, the intention, okay? These wicks, okay? I'll teach you how to catch these wicks, to see this price action actually happening, to be able to catch the position and have your entry on this wick. Even if you didn't, when you get that confirmation of the close back above, you can then look to enter the position, guys, okay? So that's the scope extension. I'll see you guys in the next video. Until next time, trade well.